Statistically, 80% of you listening to this aren't preparing for your pension, so we give you the ultimate business owner's guide. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host Claire Hancock is a finance director, chartered accountant and entrepreneur. And every week I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. Right, Claire. Well, this week we're winding forward a couple of decades and we're talking pensions.
Yes, we are. Despite
Are you planning?
Our young ages, or what we like to think is still young, but it's probably a bit delusional. Yeah, we've got a pension plan, haven't we?
I think it's quite young because I think by the time we retire, the pension is going to be knocking on 70. So I've probably got 30 years ahead and you've probably got 35. So it's actually ages. But so we need to start planning now, don't we?
That is true. But we've long had a bit of a pension plan, haven't we? So we have been quite good.
We have a plan and ahead of the game. But we are talking specifically today about how actually we found out that the majority of business owners don't actually have a plan, which is the biggest problem.
Yeah, in fact, only 20% of business owners actually have a plan for their pension and or are paying into a pension, which is quite a shocking statistic, actually. Saying that, with the triple lock these days, God knows what the pension rate is going to be when we're older. And if that still exists when we retire, well, I am looking forward to that. But
it would be a nice boost. Well, this came from this week's news story of the week, didn't it? So, yeah, in this week's news story of the week, it was in the Times. It's that only 20% of business owners have a pension versus 80% of employees on PAYE, which is what they call the business owners' ticking time bomb, don't they? Yeah. A real issue potentially coming down the line here. I don't think this is being as well publicised as it should be at the moment, because obviously, yes, it's business owners, but also we've had this massive increase in the gig economy as well, which has put loads of people into having to row their own boat. And I think by the time you add all those people together, I think there's potentially, if that keeps going in that direction and these people don't get switched on about pensions, they're going to have a real issue in 20 or 30 years' time.
I mean, obviously, this has changed massively over the past 20 years, because 20 years ago, it was probably only the most senior of employees in businesses, like I'd say middle management and above, that would have had even an employee pension scheme. But then obviously auto-enrolment was introduced. And now auto-enrolment contributions means that when you add together what the employee and the employer pay, is 8% of somebody's salary is paid into a pension if you're an employee at the moment. Yeah. So it's quite a lot of money, actually, when you add that up over the lifetime for employees. But yeah, you're right, with the increase in the gig economy, and I know firsthand, speaking to lots of business owners, if we ever touch upon the topic of pensions, they generally say to me, oh, I'll sell the business, or oh, I'll wind the business up, or something like that, like sell my business assets. But we know it's very hard to sell a business, actually. And often when people are reaching retirement, I've seen this many times, that people that need to leave their business for health reasons or retirement purposes, generally those are the businesses that go for what we call these zero money down deals, where the buyer doesn't pay any money up front.
Or they use what's called vendor finance, don't they? Where they effectively just draw down profits of the business for a number of years to pay back the value of what they bought it for. Well, selling a business is a plan for a pension. It's a bit like people's idea of selling a buy-to-let property to pay back the mortgage at the end of the term and various other things. So it is, but you need a plan, don't you?
You need a
good
plan.
Advice, you need a plan.
And the reality is that most business owners have never bought or sold a business before, and they don't actually have any realistic idea of how much their business would be worth and or how they would receive that cash. So would it be one lump sum? Would it be in installments, et cetera, et cetera? So when you put all of that combined, I think it's highly risky compared to having a pension where you know exactly how much money is in it, and or having property, because property prices are fairly stable. Even if we looked at the massive crash in 2008, I think property prices only went down 10%, was it? 11%?
17%
overall, yeah.
Which
So
is not disastrous. And then they actually bounce back very quickly to sit about 10% below.
So I wouldn't recommend that most business owners are relying solely on the idea of selling their business to fund their pension.
No. I mean, in the article, I mean, one of the biggest things that, again, business owners sort of say during the period when they're trying to run and grow their business is that challenges in savings that they have. So it's the actual ability to be able to take the money out. There's a saying, leaders eat last, isn't there?
Yeah, that's really true, yeah.
Where a lot of them will, a lot of business owners that I know pay their staff more than they pay themselves for 5 to 8 years before the business really gets into a good position for them. And they do plan to really have this big sort of equity wealth day when they sell the business if it's been successful. So it is difficult. And if you don't get to that place where they sell the business, then you've done it all for nothing.
And I think that's the thing, isn't it? It's like this constant battle off that you've got to have as a business owner between reinvesting in your business and keeping it growing and et cetera, versus looking after yourself, taking a good salary, taking pensions, all of those types of things. And it is a balancing act, and it really has got to depend on your personal circumstances, what you feel comfortable doing. And, your age comes into it a lot. If you're in your 20s, 30s, even 40s, then you can probably take more risks because you've got some years to recover. But if you're a little bit later on in life, then you might be erring on the side of caution a little bit and wanting to put a bit more in your pension so that you're safe. So it really has got to be coming down to your personal circumstances. But yeah, it is a challenge for business owners, knowing what the right thing to do is, and that constant feed and famine cycle that I think a lot of businesses seem to go through.
Well, hot on the heels of this news story, we decided to make this week's deep dive a business owner's guide protecting yourself with pension. So let's move into this week's deep dive. So Claire, let's start with exactly what business owners should be doing. How can we support them? How can we give them great advice about, getting themselves geared up for a pension, other than initially the first most important bit of advice, and you hear this in the personal pension world as well, which is it's not about the amount you do, it's about the habit, isn't it? And start early.
Yeah, 100%. So just before we kick off, I will cover ourselves legally to say that we're not financial advisors. So if you are going to do this, we're just going to talk to you today about, from a tax perspective as a chartered accountant and what we've done as well with our pensions. But by all means, make sure you do get professional advice on this, because it can literally make the difference of tens of thousands of pounds over your lifetime. So Absolutely. The first thing that I would say is that if you're a business, you should be considering making employers' pension contributions into a pension scheme. And the reason why employers' pension contributions are so powerful is because they basically bypass all of the taxes. So when you make pension contributions, there's no national insurance payable for either the employee or the employer, and employers' national insurance is 13.8%. So if you're paying salary instead of pension, you're paying 13.8% as an employer's tax. So you save that immediately. The second thing is, as an employee, obviously you actually haven't received any of that money yet. It's gone straight from your employer into your pension scheme. So you're not paying any personal taxes. So that would be your tax at either 20, 40 or 45%, depending on your tax rate. And also, the third benefit for businesses is that it's deductible from your company profits for tax purposes. So you then save corporation tax, and obviously the highest rate of
could be up to 25% now. Yeah, anything between 19
yeah.
and 25, depending on where your business is. It's massive, isn't it?
So there's just tax savings across the board here. So
Brilliant.
If the profits are in your business and you've got the cash flow in your business, then I would absolutely, that's my first place to normally start, is I pay employers' pension contributions from my company straight into a pension.
Do you know what's like wild about this is that you go back to the news story that only 20% of business owners are paying into pension versus 80% of employees. Like, obviously for employees, the tax benefits for pension are insane, but for business owners, they're like supercharged insane. This idea that, you're not paying the corporation tax, you're then not paying the dividend tax you would have paid to take the money out of the business. You then, or if through salary, you're not paying the national insurance, like you're way up at 50, 60 odd percent savings. So, you put 40 grand in, well, you put 20 grand in and it's got the value of 40 grand in the business. It's just wild.
Yeah, absolutely.
Not to do this. I think they're just missing a trick. Question for you. Do you think that this 20% issue with business owners do you think it's an education issue, that they don't know the benefits, just how powerful the benefits are of or the vehicles to use to put it into pension? Or do you think that there's something else going on?
I think it's a combination of the two. And actually, one of the things that I was working with a business with this year is their profits went up to, I think it was like £265,000, which meant that they were at the higher rate of corporation tax, and it meant that they paid a flat 25% on everything.
Right.
So what we did is we put a lump sum payment into their pension, which just reduced their taxable profits down below that 250k mark, which meant they had that tapered rate. So they actually then ended up paying a corporation tax of like 24% across all of their business profits instead. So by the time they've counted in that impact of paying a different percentage of corporation tax, and if you don't know what I'm talking about, then do check out my latest YouTube video, Corporation Tax Explained, because it sort of just covers all of that about how the percentage of corporation tax that your business pays depends on the profits that you make. And once you go over 250, it's just
no, like
blanket 25%.
Staircase, isn't it?
Yeah. So we were able to make a significant tax saving from corporation tax just by doing this lump sum pension and reducing the profits down. So that can also be really powerful as well. And actually, when we did a cash flow calculation, by the time we'd added up all of the tax savings, it pretty much equaled the amount that was paid into the pension in the first place. So it was quite staggering how impactful that can be. So if you have got time to do the calculations, or you can get somebody to help you do the calculations, then that's absolutely the best place to start. But I also think that there's a little bit maybe like feeling like pensions are really complicated and not knowing where to put your money. So a lot of small businesses, if they've got employees, will probably be using Nest. And that's like the government pension pot that people can pay into. And it's okay. You know, it is what it is. It's government run. So it's meant for small businesses to be able to set up pensions for their employees without having a lot of like administration and fees and all of that type of thing. But if you're a company director, you're probably going to be paying in quite significant lump sums, and therefore Nest is probably not where you want to be putting your money. And going and finding, you know, maybe one of your bigger schemes like Scottish Widow or Aviva, any of those, maybe is not also quite right for those sorts of lump sums. And you're probably going to want to go to a financial advisor, and there are various things you can do with even setting up your own limited company that has a certain ring fence around it and is classed as a pension investment and stuff. So there's lots of things that you can do. And I think it would be worth getting an appointment with a financial advisor and talking about how much money as a business owner you think you're going to be putting into your pension pot, and what the best place to put that is, because it's probably not going to be Nest. In fact, I can say it's definitely not going to be Nest, and it's probably unlikely to be the high street brands like Aviva and people like that.
And there is another route, again, not financial advice, but that people do, the pensions industry deliberately overcomplicated it, because it's a huge high fee area, and
really
it's
regulated.
It's deliberately made to be overcomplicated by the institutions so that you feel like you don't know what you're doing. So you have to pay huge exorbitant amounts of money to mutual funds and financial advisors to do that. If you know, the money on an average mutual fund at 1% is, you know, insane over the lifetime. So what I would say is, I know our audience are super smart. You know, these are business owners, and absolutely they can educate themselves on this and actually self-invest. You know, there's lots of platforms out there. That's what I do, you know, using Interactive Investor. Pick your own funds, you know, don't be overcomplicating it, and, you know, look at simple index tracker funds, global tracker funds, that type of thing, but get the education first so you feel confident in doing that. And there's tons of great YouTube channels and podcasts out there that, you know, there's a fantastic YouTube channel called Pension Craft, a guy there, ultra dull but worth a, you know, ultra dull but ultra, you know, valuable to business owners. So, you know, just consume some content, and, you know, don't feel scared about having a go yourself once you're educated on it, because you are business owners. You know, you've started and run a business. You've done the most difficult thing you can do. Pensions, compared to running a business and starting a business, are, you know, no more complicated. It's just all about getting yourself educated. And
one of the things that we've done, you know, we've both got pension pots from employment for when we had jobs, and we've got those in certain places. And then you just mentioned Interactive Investor, we use that, and that's more like investing in sort of stocks and shares, but it's, you know, because it's in a pension pot, it's not taxable and things like that. So there are lots of benefits to doing that, but we spread our risk as well. We don't have everything in one place. And I think that's also a key thing, that if you're making these lump sum installments, especially if you can afford to make installments, you know, some years it's going to be nothing. Some years might be a few hundred or a few thousand, but other years you might have sort of 50 or 60,000 pound to put into one of these things. And therefore it does make it worthwhile actually to spread your risk a little bit and maybe have multiple different products as well.
Yeah. I mean, there's a couple of other things to touch on. I mean, so we've talked about how to get the money into that pension. Obviously, as I've said, you've got to do something with it. You have to invest it. Otherwise, the money's going down, it's being eaten away by inflation. So you do need to invest it, but that's where you need to get proper financial advice around where you put that. But of course, the beauty of it when you have invested it, Claire, is that growth with pensions is completely capital gains free and income tax free. Well, it's not income tax free when you take it out, but it's free of capital gains, isn't it?
Yeah, absolutely. So you don't pay any capital gains tax on it, no matter how big your pension pot grows. And then you only pay income tax if you go over the personal allowance. So if you don't take any money out of your pension until you don't have a job anymore, then you're still subject to the same tax rules. If your income is over the personal allowance, then you will need to pay income tax. But if it's not, then no income tax is payable on it. So it's essentially could be tax-free money.
And it's not bad. And if you get your investments right, I mean, if you take, an average of the developed global markets in the last 20 years, they've increased by 524%. I mean, you could have 5x your money in the last 20 years if you just put it in a very boring kind of, US tracker, S&P 500, that type of thing. So that's obviously a massive benefit. So we've got, the stacking of the benefits here with pensions is like, it starts to become sacrilege that only 20% of business owners are trying to put some of their money into a pension. And finally, Claire, what are those allowances? So like, what's the maximum that I can put in there and various other bits and pieces?
Well, I think the thing I'd like to just touch on firstly is that we've just talked about what to do if the money is in your business bank account still, if you like, if it's within your business and it's pre-tax profits. But there are people that would have maybe taken the profits out of their business already. They've maybe done their tax return and it's sitting in a personal bank account. And if that's the case, then you can still invest in all of the same pensions with your personal money.
Yeah.
And when you do that, any money that you pay into your pension, you declare it on your tax return and you get the tax back. So if you've already paid 40% tax on it, you're going to get 40% tax relief back when you put it on your tax return. So don't let the fact that you've already got that money in your own personal bank account put you off from investing.
But they can't reverse the corporation tax element. That's already, that boat has floated, is it?
Yeah, that has already happened, unfortunately. So,
but it's still worth it because if you're a high rate taxpayer, you've got 40%,
or 45% tax to come back. Yeah,
what is it? 33? But they keep moving the dividends. 33.25%, something like that. Some crazy number in terms of high rate dividend tax.
Yeah, so
you get that back.
It's definitely worthwhile still doing. And, when you have a pension, whether the money is coming from your employer or your employee, doesn't matter. It can still go into the same place. So whether you can do the same thing, you could pay some contributions from your business and some contributions from your personal bank account in the same year. And also the other thing to mention is that, any employee in the business can have a pension. So particularly for the limited company owners where they might have a wife or a child or a husband or somebody like that on their business with them that have a salary from the business, then they can also be paying into a pension for them as well. And that would be classed as a business expense and deductible for corporation tax purposes and all the other tax benefits we spoke about. That can be done
pre-corp tax as well?
Yes. So
that's a cool benefit.
Yeah. So anybody that's a director or works in your business, you can have pension contributions for.
Is that, I might be totally wrong, is that defined as like salary sacrifice? Is that what they call it? Or
there is a way of doing salary sacrifice, but salary sacrifice applies for employees' contributions. So
you're assuming the other person, the husband or wife, is a director of the company?
Yeah.
Okay, fine. Yeah. So they're entitled to just take it as normal, right?
Yeah.
Good. Okay.
So you asked me a question, Simon. What was your
annual
question?
Allowances.
The annual allowance is £60,000 per annum at the moment that can be paid into a pension, into your personal pension scheme.
So that's just been increased, because I thought it was 40,000.
Yeah.
So when did they increase that really recently?
Yeah.
Okay, so I mean that's massive. So we can't get our tax bands up by anything like inflation over the last 10 years, but we can jump our pension banding up by literally 50%. I mean, governments really love pensions, don't they?
Well,
if you think about how they treat the salary, property investors, all the rest of it, but pensions, they just, my goodness, they just give, don't they? I mean, it's just fantastic. Yeah,
I mean, there are some really good loopholes as well. I think there's another thing that we haven't spoken about, and that's property. And I think that is there are literally millions of YouTube videos on this, but it's something that we've done. We take the profits out of our limited company businesses and we transfer them to another limited company. So it means that you pay corporation tax, but we don't have to pay the money to ourselves as earnings, so we're not paying any personal taxes on it like dividend tax or anything like that. It doesn't go on our tax returns. We can essentially do what's known as intercompany transfer between one limited company to another, and then we invest that money into property, and that is pretty much our pension, isn't it? Is we've got quite a large property portfolio, but it doesn't have to be residential property, it can be commercial property too. And another really common thing that limited companies do is if you want to look at buying your commercial premises that you're trading from, then you actually buy that in a different limited company, and there's all sorts of tax benefits associated with doing that too. So you can really get quite clever and incorporate your business plans into your pension plans, because if you're looking at buying your commercial property that you trade from and you buy it in a separate company, then that gives you all sorts of options, because not only are there reliefs if you were to go on and sell that, but you could also then keep that into your retirement and lease that commercial property to somebody different and have income from it.
So, a couple of things. So if you're paying rent to a landlord anyway, you might as well take out a loan and mortgage on the property and pay yourself that, and net about the same anyway. Yep. So that's just sensible. If you've got that in a ring fence in a separate limited company, you sell the company, the trading company, that trading company continues to pay you as the landlord for that premises, potentially. So that becomes ongoing, whether it's that company or a future company, so that becomes ongoing income as well.
And that could give you a source of income into your pension as well, if you keep hold of that property in that company.
Yeah. I mean, I guess the big one around property in general, one of the reasons that we like it is that, unlike a pension, the one benefit is that you haven't got to wait till 55 to access it. So, property does pay an income as well as capitally appreciate, and you can take that income today. So that you can, if you wanted to suddenly retire early, if you hit that point, you could do that. Or if you just want to top up your income with it, you could do that. Or you could just use it to buy more property and roll it back up. But with the pension, great tax benefits, but you mustn't forget that it is completely locked up until 55, which will soon become 56, 57, 58, because it follows the state pension age by minus 10 years, doesn't it?
Yeah, and this is always something that if anybody ever says to me, how do I reduce my tax bill? And there will be people who say, well, pay money into your pension. And I just think you shouldn't be paying money into your pension to reduce your tax bill, because money, you can't get that money ever again if you need it.
They say it, but in a non-strategic way. They say it in a I'm getting one over the government way, don't they?
Yeah, and it's not. Instead of paying the money to the government, you're paying the money into your pension, which, yes, theoretically is a tax saving, but actually your cash flow is still the same. You've still not got that cash in your bank to reinvest or do something clever with. So I think you need to pay into a pension because you want to pay into a pension, not just to reduce your tax bill.
Awesome. Well, thanks for that. Anything else on that, Claire? Or I think that pretty much wraps up. That is a pretty good business owner's guide to protecting yourself with a pension, I think.
Yeah, I think we covered everything.
Covered the key aspects,
staying within the realms of non-financial advice.
Yeah, absolutely.
Very difficult, but...
And I'm sure that we'll do some further things in the future around protecting yourself as a business owner for your future plans. So let's move on this week to Profit Cash Growth Extra. So this week, you told me I had to put this down because how many years have I been like an avid YouTube fan? And I've sat there and watched the ads all this time. And you're like, when you just skip that button that keeps telling you to take YouTube Premium, and you're just like, nah, I'm not paying that, I'm not paying that, I'm not paying that. And then one day somebody says, you should just do it, and you do it, and then you're just like, this is amazing. There's no adverts at the beginning, in the middle. To be honest with you, the longer the form content I started watching on YouTube, the more annoying it got, because when you're watching stuff that's like an hour, you watch some Alex Hormozy stuff that's like an hour,
and
it's just like and the ads get closer together the longer you get into the content. It's like, I think it's really clever the way they do it. They're trying to just
when they know that you're hooked.
Yeah, you're hooked.
If you, once you get an hour into Diary of a CEO, then those ads are coming like every 5 minutes, thick and fast, aren't they? It's very annoying. So
my one this week is get YouTube Premium. If you're big into YouTube, get YouTube Premium. It's worth every penny just to lose the ads. But it also does other things, doesn't it? You can download and watch offline.
Yeah. So the reason that I got YouTube Premium, so it's £13 a month, so $12.99. And that includes VAT, so you can claim the VAT back if it's a business expense and you use it for business purposes. Now, I've got a YouTube channel, so I'm doing a lot of research on YouTube, which is how I can get away with it being a business expense for me. And you're the same, you have a YouTube channel for your business too.
I just use it for education. I think any business owner could claim they use it.
You have to be careful on the educational front, because there is something that says it's got to be wholly and exclusively for business purposes. And you would argue that YouTube actually the training that you're doing on YouTube is actually benefiting you rather than your business more. So it's a very grey area with HMRC should you get tax inspection. It's also your choice whether you care about the risk associated with a $12.99 subscription or not. But nonetheless, I can claim it as a business expense, and I think a lot of you probably could argue it as well. I used to pay $10.99 a month for Apple Music, but you can get YouTube Music with the YouTube Premium. So I just simply swapped Apple Music for YouTube Premium. I can skip all the ads, but also I can download YouTube videos to watch offline. And particularly if you're going on an aeroplane or something like that, we would stack up loads of Netflix and stuff on our iPads, wouldn't we? And you can do that with YouTube, which is cool. Fab.
There is one other benefit, which again, you don't realise how good this is that actually you can keep your YouTube app open while you're doing other things on your phone. So without Premium, the second that you go to another app, it closes down.
Yes, it stops playing.
Yeah, it keeps playing. It's like a minimised screen while you do other things on it. And just that functionality as well is just another game-changer thing. So actually, I think the package of YouTube Premium overall actually feels fairly good value for money for the additional you get.
Although what I would say, your number one criticism has been around the music app. So the music app, actually, we've got like Sonos speakers around our house, haven't we? And it integrates properly with the Sonos system as well. Yeah. But you have been quite scathing as a music man. You've been quite scathing as to the quality and sound of the music, haven't you? It's very
different songs want different
the
levels.
Volume of
volume
different
levels
tracks
different. It's not
will be
refined.
1 minute you'll be deaf, the next minute you'll be turning it up. And so
but you don't get YouTube Music as part of YouTube Premium, do you?
Yeah, you do.
It's another cost on top.
No.
You sure?
You get YouTube Music with it. That's the reason why I did it in the first place, because I swapped Apple Music for YouTube.
Well, there you go. Just another benefit. Then it's incredible value then, isn't it?
Yeah.
So get YouTube Premium if you watch YouTube. Get rid of those ads. It's
$12.99 a month, and you'll probably easily get an hour back every week. So it's pretty much national minimum wage now, isn't it? So swap an hour of work for a YouTube subscription.
Absolutely. And talking of subscribing, did you know that 60% of people that listen to this podcast are not following the podcast? They're not subscribed, which is crazy.
And do you know what is even more crazy?
It's the review level, isn't it?
Well,
do you know what?
I was actually going to say, because
3 came in last week.
I was going to say it's because we are an official charting podcast now, aren't we?
Woo-hoo.
We
number 81
got into the top 100 podcasts in the UK, so that was quite a triumph.
Peaked at number 81, which is I don't think it was UK. I think it's their global charts, the Apple
even better.
charts. Yeah, tremendous. So so do make sure you've hit the follow, but make sure you get this drop into your feed every single week, please. If on any of your platform, if you do like the show, please just drop us a review, 5-star. We're hoping, and if you want to ask us any questions, just pop the comments in the review as well, because we do read every review. So if you want to ask us any questions or any topics you'd like us to raise on the podcast, you can do that through the review system. And as always, you can check out Claire and her business at profitcashgrowth.com. If you need any help with your management accounts, she will do a free business review of your business initially to see where there's little benefits that we can get for you out of your business. And we'll see you guys again next week.